This is the moment we've all been waiting for in crypto. The mood on Washington, D.C. is electric, giving us every reasonable reason to believe the crypto market could indeed be going into its bull run soon. We're seeing a wave of new laws, mega reports, and regulatory green lights, all aimed at pushing America to the forefront of the digital asset revolution. It's actually funny because if you had told me 2 years ago that the White House, Congress, and the US Treasury would all be aligned and fighting to unleash Bitcoin, Ethereum, and DeFi across the economy, I would have laughed, maybe just not believed it was going to happen for at least like the next 10 years or so. But here we are. This is a coordinated pivot on a scale the world has never seen before. We're literally making history right now. So in today's episode, I'm breaking down how this all-in policy move is about to hit your portfolio and why Wall Street and the US Treasury are preparing for a historic capital rotation, and how these new laws and stockpiles could trigger the fastest Bitcoin and Ethereum supply crunch in history. Imagine being early again. Picture yourself in 2020, but with 100 times more firepower behind you. So here's my promise. By the end of this video, you'll know exactly what's happening, why the US is moving so fast, what's the urgency, and what moves to consider right now. Because the question is, are you going to be ready for this next phase? If you're watching this video, you're definitely already ahead of the 99% out there, which and whom we need to share this content with, because this is who this content is dedicated to, is to the new people and to anyone who wants to hear the news and wants to hear what's going on in the crypto market in light of the macro market conditions in a very honest way that always shares with you the pros and the cons, because I think that's something that's missing in the market, in the influencer market, so to speak, and I want to be that person to you. That said, let's get into today's show because it's a juicy one and it's jam-packed with info, okay? So first off, we know that the US macro backdrop just reached its maximum tension. Yesterday, for instance, if you didn't already follow the news, I'm here to let you know, the Federal Reserve made history. Rates are still on pause, but this time, two Fed governors, Waller and Bowman openly called for a rate cut. That's the first double dissent at the Fed in over 30 years. So if we think about the power struggling at the top right now from leadership, it's very clear. There's a war around what the future of American money looks like and how it will operate. And right now, the outcome of this battle is setting the stage and foundation for what's about to happen next in the crypto market and into the future. And President Trump is throwing gas on the fire. He's calling for a 300 basis point rate cut. And in classic Trump style, of course, he dropped a wave of tariffs mid-Fed announcement. 40% tariffs on Brazil, 50% tariffs on copper. It's no wonder commodities snapped and copper prices tanked in real time. And the tension between Trump and Powell right now is essentially incredibly palpable. Powell is now warning that the US is only at the very beginning of a tariff-driven inflation, and the price increases could stick around much longer than anyone expects. Trump has even been seen on social media, on Truth Social, his social media platform, calling Powell too late Powell is what he called him. He even went as far as saying that Powell is costing the country trillions of dollars. So the Fed right now is caught between political heat, sticky inflation, and a real split at the top. And markets are reacting instantly as they always do. We saw stocks sell off and then rocket to new highs within hours as traders tried to price in what comes next. Meanwhile, the Fed's still running quantitative tightening, draining liquidity by reducing its holdings of treasuries and mortgage-backed securities. Powell's telling us that with a stronger labor market and volatile GDP, there's much more to come. He's hinting that the biggest moves haven't even started yet. And here's why this matters to you and to me and to every crypto investor. The Fed's stance is the ignition switch for risk assets. So when rate cuts finally arrive, it's like flipping the nitrous on a race car. Markets can move from 0 to 60 almost overnight. And a real pivot would pull forward a tidal wave of new capital, drive yields down, and spark a new rotation into Bitcoin, Ethereum, and the entire altcoin universe. Right now, we're sitting at the starting line with every engine revving and the crowd waiting for the light to turn green. So let me ask you, when was the last time you saw Wall Street, the White House, and the Fed Reserve this far apart? All while crypto sits right at the center of their conversation or dispute. And let me know in the comments section. Do you think the Fed will cave to political pressure, or will inflation force their hand? Because whichever way they move, the impact on Bitcoin and crypto will be huge. And the news of Washington right now is the clearest all-in signal I've seen for digital assets. If you've been waiting for the day the US government stops fighting crypto and starts building around it instead, that day just arrived. The White House just dropped a 160-page digital asset policy report that reads less like a warning and more like an open invitation to every builder, investor, and institution on Earth. It's a full court press to ignite a new golden age for digital assets. Everything from banking, tax, and securities, law, to stablecoins, DeFi, and even mortgages and retirement accounts. The stated goal is to make the American digital asset market the deepest, most liquid in the world. So just imagine being a founder or an investor and seeing the world's largest economy roll out the red carpet. Since election day, Bitcoin has exploded 74% higher, and the global crypto market has added 1.57 trillion in value. And that's just the opening move. We can expect a lot more. The White House's new strategy says American entrepreneurs and software developers should have the liberty and regulatory certainty to upgrade all sectors of the economy using crypto. Thank you. Can we have an applause? So you can feel the urgency. Every agency and lawmaker is being told to move as quickly as possible, to outpace global competitors, and to leave the days of uncertainty and legal gray zones behind. So you see how at the core of this push is market structure reform. Congress is being urged to pass the Bipartisan Clarity Act, which would finally give the CFTC clear spot market authority over digital commodities and empower it to embrace DeFi's full potential. This is about real oversight. And it's also about opening the door for institutional and public capital. The administration right now is treating the CFTC chair appointment like a Supreme Court pick. Brian Quintez is already nominated, but the White House wants a leader who can guide this transformation and win the trust of both industry and the public. And the DOJ is on the record saying regulation by prosecution is over. Another applause, please. And the Treasury has officially dropped sanctions on Tornado Cash. So this is a full-on cultural flip. The era of chasing neutral code authors and shutting down crypto startups before they even launch is behind us. We're also seeing a tidal wave of regulatory clarity around which digital assets will get mainstream ETF access. The SEC's new generic listing standards mean any coin with 6 months of US futures can qualify for an ETF wrapper. This instantly puts Bitcoin, Ethereum, Solana, and XRP at the front of the line. And with the comment period ending, the window for approvals could open as soon as September. The stablecoin bill is signed, new rules for issuers and banks are on deck, and the banking system is being pushed to treat crypto businesses like any other legitimate customer for the first time in its short history. And to top all of this off, like the cherry on the ice cream, Congress and the IRS are fast-tracking a crypto tax overhaul. Staking, mining, NFT valuation, wrapping, even de minimis exemptions, and official recognition for digital assets as a standalone class. The US wants tax rules that are clear, fair, and modern. No more patchwork, no more uncertainty. This is as bullish as it gets. For years, the single biggest roadblock for big capital, pensions, endowments, sovereign funds, and public companies was regulatory uncertainty. And now the floodgates are wide open. The legal door has been flung off its hinges and institutions are rushing in like it's Walmart on Black Friday. Every barrier to entry that kept trillions of dollars on the sideline is dropping in real time. As I said in yesterday's video, it's like our own Berlin Wall between old finance and new finance, and crypto and Web3 is crumbling right now in real time. And as this happens, as this wall and barriers is crumbling, capital and liberty is just gonna pour into the crypto market. So you see, this is the most aggressive push for crypto legitimacy America has ever seen, has ever launched. So if you've been waiting for a clear signal from regulators, this is that moment. And one of the most groundbreaking shifts buried in the White House's report is the push for a national crypto stockpile. The US Treasury is now beginning to hold Bitcoin, Ethereum, and potentially other assets as strategic reserves, using seized and forfeited digital assets, of course, that it took from illegal or illicit crypto companies or activities. And senior officials confirm this process is already underway, and future updates will reveal which coins are being added. So just take a step back and imagine this for a second. America is going from a crypto crackdown setup environment to holding Bitcoin on its official balance sheet. For years, the US fought Bitcoin's adoption at every turn. Now it's preparing to vault itself into the ranks of sovereign whales. The strategic logic is very clear. As more countries accumulate, as scarcity intensifies, whoever controls the largest stockpile shapes the future of digital money. But the shockwaves don't stop at the government level. What's happening at the corporate level is just as big. Strategy, Michael Saylor's company, set the tone by racking up more than 628,000 Bitcoin. But now we're seeing the first global wave of full stack treasury companies. Just look at Metaplanet in Japan. This company went from a struggling hotel operator to the largest non-American corporate Bitcoin holder in under a year, to show you how fast and how powerful the potential of flipping your business model to be a Bitcoin holding model can go and can grow. It multiplied its share price by 30 times and its market cap by 200 times, all because it went all in on Bitcoin. This is the new arms race. We're seeing Europe, the UK, Asia, and the Americas all racing to build their own Bitcoin holding strategy. We see public companies using both equity and debt to buy more Bitcoin, driving up their Bitcoin price per share ratio and justifying high premiums over net asset value. And for US firms, the new ETF rules make it easier than ever to launch products for BTC, ETH, and soon Solana and XRP. This means Wall Street, corporate America, and even foreign buyers can finally pile into digital assets using publicly traded on-ramps that didn't exist before. So you see, the supply shock playbook is going global now. And every signal is pointing and telling us that an acceleration is up ahead. So now let's break it down and bring it down to the blockchain level, because this is where the signals separate hype from reality. Even with all the headlines, Bitcoin's on-chain data is telling a story you don't want to miss. Right now, net realized profit and loss for Bitcoin holders is holding steady. There are no signs of a massive wave of profit taking, and on-chain metrics like adjusted SOPR are still well below the kind of blow-off levels you see at market tops. So in other words, the people who bought early and rode this wave, this run, aren't racing for the exits. They're holding, they're holders. This is not the pattern you see when a market is exhausted. If anything, it's a sign that conviction is rising and the next move could be bigger than people expect. And let's check out what's happening on the price chart. Bitcoin is still trading above 118,000, and the supply held by long-term holders keeps climbing, with the US Treasury, major corporates, and Wall Street all looking to build reserves or launch ETFs. The number of coins available on exchanges is also drying up very fast. And altcoins are gearing up for a similar story. The total altcoin market cap is consolidating above its 2024 high of 1.27 trillion, and ETH led the latest leg higher. The structure is textbook bullish. So as long as we hold above those April and May highs, there's real momentum for the next leg up. And if the price ever does dip below 960 billion, maybe we'll chop sideways for a bit. But right now, the technical setup points to breakout territory. So it signals to a pump. Now let's talk about Solana. With the CBOE's new generic listing standard, Solana now qualifies for ETF inclusion by September, since we know their CME futures have been live since February, and the SEC faces an October 10th deadline for a Solana ETF, which means we could see the first mainstream SOL product on the market in just weeks. This unlocks in-kind ETF creation, staking, and brings a tidal wave of institutional flows right into SOL, and soon after XRP. There's another player at the center of this new market structure: Chainlink. The SEC's recent guidance was directly shaped by Chainlink's feedback. Stablecoin issuers are adopting Chainlink's tech as the new law kicks in, and Chainlink was even called out by name in the White House's digital asset report for its role in setting national blockchain standards. Now, I personally love Chainlink. I did a whole video on Chainlink. Actually, you can go check it in my playlist. But Chainlink is quietly becoming the backbone for US digital asset monetization, something that was once unthinkable just a couple of years ago. So now let's take a step back and look and think about what this all means for everyone in the crypto space, building, investing, or just even holding in the US. For years, America was a legal minefield for crypto. And now it feels like finally the floodgates just open. Crypto is on track to be recognized as its own asset class, with tailored treatment and not just as an afterthought. Frankly, I'm still wrapping my head around how things have changed so fast. For the first time ever, safe harbor protections for DeFi teams and self-custody rights are being written into law. That means Americans will be able to hold their tokens, their coins, and launch new projects without fear of being shut down by regulators or prosecuted in the middle of the night. The DOJ is finally shifting its focus to actual criminal activity like terrorism, organized crime, and trafficking, and is making it clear that the days of targeting neutral software or innovation companies are over. So if you're a builder or you dream of being a builder, there's never been a better time to get started. The official message from DC now reads something like out of a crypto bull's dream. Start your company here, launch your protocol here, hire your workers here, and you'll be glad you did it. That's not some big crypto VC. It's a direct quote from US Treasury Secretary Scott Bessent himself. It's wild to think about the barriers that used to keep US innovators on the sidelines and how they're all disappearing now overnight. So as we enter into this new era, a few near-term catalysts have the power to supercharge everything we've just covered. First up is Michael Saylor and his company's strategy. Saylor is calling the Q2 earnings call, scheduled later today after this video is published, the most important event in the history of strategy. And for good reason. With the US government now building a Bitcoin stockpile and corporate treasuries around the world piling in, any new MSTR announcement could send shockwaves through the market, not just for Bitcoin, but for all digital assets. All while macro data is keeping everyone on their toes. We just saw the latest PCE inflation print come in hotter than expected, which has already reduced the odds of a September rate cut and increased urgency for institutions to seek hard asset hedges and protection. While at the same time, political volatility is reaching new highs. The ongoing feud between Trump and Powell and the way Washington is rewriting the crypto playbook in real time means every policy headline could become the next market-moving catalyst. And let's not overlook the ETF timelines. With Solana and XRP on deck for ETF inclusion this fall, and the comment period for the SEC's new generic listing standards closing soon, we're staring down the launch window for a whole new class of crypto investment products. We have a front row seat right now to watching history literally unfold before our very eyes. The next 6 to 12 weeks could deliver more fundamental change to the crypto market than the past 3 years combined. So in conclusion, and as we wrap up today's video, it's so incredible and important to note that right now we're experiencing America's crypto revolution, and now it's official policy. Washington and Wall Street are all in, and the world is watching. For everyone who's been waiting for real clarity, a level playing field, and the chance to build and invest with confidence, well, the time has arrived. We have the beginning of a US crypto arms race, an open invitation to global capital, and a supply shock that could rewrite market history. So hopefully you're not on the sidelines and still questioning whether you need to invest in Bitcoin or not, or Ethereum or Solana. But if you have been, now is still a good time to get involved. It's not too late. And I'm so happy you've joined me on my channel, because this is the information we're going to get into on every single show, talk about what's going on in the macro markets and the crypto markets, all the nuances. And it's my hope that in watching my content, you'd feel more empowered and prepared this bull run, because it's going to be wild. Anyway, guys, I love you so much, and I will catch you in my video tomorrow. Ciao.